Hey, it's Andy here. Just a quick hit on these job numbers today and what they mean for the economy, for bonds, for Bitcoin, and for stocks. I know that's a pretty big swath of things to cover, but we're going to do it really quickly. So the job numbers were way better than expected. They came in at like 379,000. The market was expecting 225,000. And of course, the immediate impact was that we saw a sharp rise in bond yields. Stocks did sell off initially, but then they kind of came back. Overall, what I would say is this is amazing. These are great numbers. And what's interesting is you get into the guts of these things, you see that there's job growth in two areas that were hardest hit during the shutdown and remain the hardest hit of the 10 million people that are still unemployed in the country. And that is leisure and hospitality, which is bars, restaurants, hotels, and of course, travel and transportation. We saw job gains in both of those. Remember back what happened in December, we saw like 500,000 people lose their jobs. It was crazy in that sector. But this is what's really encouraging about the numbers for February, because what was going on in February? I don't know about you, but I was freezing, right? I'm in just outside of Chicago, and it was super cold for like 3 weeks. And of course, then there was the train wreck of a storm that hit Texas and all of the disaster that caused down there and hardship for people. In other words, like despite that, we got these great numbers that came out, which is fantastic, right? We really can see the economy start to pick up and start to grow rapidly. As a matter of fact, if you take a look at what's expected for this quarter, if you look at the Atlanta Federal Reserve's GDP estimates, they're like near 10%. And that's in their nowcast. And then I think, or maybe it's GDP now, I forget which one it is. And then, of course, the New York Federal Reserve have one, I'm pretty sure that one's called Nowcast, and that's at 8.5% or 8.7%. In other words, it's extraordinary the amount of growth that we're getting in this quarter. So rapid growth. Now, this comes on top of, or what will come on top of that really boosts things up for the second quarter, maybe even the third quarter and the fourth quarter, is this $1.9 trillion stimulus package, which is being worked on right now in the Senate. It got passed in the House on Saturday. Now it's being worked on in the Senate. There is a lot of money that's going to flow from that. And you really have to wonder, like, okay, $350 billion state and local governments, do they really need it? I mean, a lot of these states are running surpluses right now. And so you kind of wonder, yeah, okay, you can make the case for it, but boy, there's a lot of money that's flowing out that you really shouldn't go to states that are running those surpluses. Look, I want the 10 million people who've lost their jobs because of COVID, because of the shutdown, those people I want to see healed and helped. Just like I want to see the nation healed and helped and vaccinated, right? But as far as people getting $1,400 stimulus checks that are working, I mean, the optics on that it just doesn't seem right that should happen. Now, when this occurs, and it will occur, right? This is the whether we need it or not, it's still coming stimulus plan of $1.9 trillion. This is going to jack up the economy, but it's also going to force or create a lot of pressure on interest rates to go higher, because we're going to see rapid rates of growth. Like 10% growth over an extended period of time is going to generate inflation, and it's going to generate problems. Now, I believe the Federal Reserve by the end of this year will probably act. They'll pull back on the stimulus. They'll pull back on the quantitative easing that they do. So that would force and make additional pressure on interest rates. And what does that mean for stocks, for Bitcoin, and for the economy overall? Well, we're growing rapidly, right? So we know that for Bitcoin and risky assets, that will put pressure on them. It doesn't mean they'll go down significantly, but we won't see I don't see a way for these to have the same the same price gains that we had during this, just really the last 3 months. And I think you'll see continuously a shift out of these risky assets, these alternative assets, into, so like tech stocks, Bitcoin, things like that, into more value orientated stocks, stocks that are going to appreciate or do well, companies that are going to do well when the economy reopens. And as I said, I think it was yesterday, we already have a third of the population essentially vaccinated. We're going to get a lot more, maybe the entire adult population vaccinated by June. And so just to wrap this up, overall, these job numbers were fantastic. I want to see people going back to work in the leisure and hospitality, transportation, and travel industries. I think that's wonderful. And I think we're going to see much more of that going forward. So the big takeaway here is we're going to see continued job growth, and that's great news for the people that have been affected. All right, I'm Andy Bush. If you like these videos, check out the video below. If you want to get more of these, click subscribe. You can get all my research at andrewbush.com. Thanks very much for watching.